These are 3 reasons why the Stage 3 tax cut will be good for existing homeowners and new fresh buyers into the market. Now, first of all, if you're a noob, what is the Stage 3 tax cuts? So the Stage 3 tax cut is basically treated like a movie, right? So it's a 3-part movie. It's the final part of a tax reform. Think about like John Wick, This is like John Wick number 3. And it's coming to cinemas in July 2024. So there's 2 key changes. One of them is they'll merge the tax brackets. For example, those that were on the 32.5% tax bracket and those that were on the 37% tax bracket will be merged into a 30% whole tax bracket for income between 45 to 120k. So think of it like the Spice Girls song, "When to become one, I need some love like I never needed love before." Yeah, if you're a millennial, that brings back nostalgia. And the second key change is if you earn over 200k, you get hit with unnecessary love of 45%. Which a lot of clients are complaining to me at the moment. They're like, "That's not love, Q, that's hate." Now, that's just a tax cut in a nutshell. Let's jump into number 1 reason why the Stage 3 tax cuts are good for borrowers and caveat for mid-range earners. And the next question you might be asking is, how, Q? Well, based on tax experts and articles I've been reading, the Stage 3 tax cut can potentially unlock an extra 100k in extra borrowing capacity for these mid-range earners. Let me give you an example. For someone that's on 120k on the existing taxable bracket, they'll be charged a tax of $29,000, roughly, at 37%. On the new Stage 3 tax rates, they'll be charged at 30%, which means 7% less. Now, not to get so complicated with the maths, well, that's an extra 7% of money back in our wallets, which the bank's like, I can give you more money. And reason number 2, not myself, but quoting Chris Richardson, the economist of Deloitte, not my words, he says that the Stage 3 tax cut, once enforced, is equivalent to 0.5 to 0.7% rate reduction in your home loan. So for existing homeowners, that's a good thing. But again, it's for mid-range earners. And reason number 3, as you can see from this table, the average change in tax by household income group due to the Stage 3 tax cut. You see this group? This is the group that you'll be competing against in auctions for new buyers. They will be heavily disadvantaged with the Stage 3 tax cut, whilst for those middle to high to middle income earners, you guys will have more cash in your pocket. So for those that will be earning between 97k to 136k respectively, will get the largest average gains at tax time. This may give you the added leverage to bid at auctions against those rich mofos, which by the way is those that earn over 200k. They're not rich. People like myself are actually struggling. Well, I've got about 8 investment properties, which I've leveraged through negative gearing, which is lowering my tax. That's my loophole. But what I mean by struggling is, the cost of living is still hitting us. But because I'm in the industry, I know how to reduce my tax income to benefit from that. While for those who don't have property, well, sucked in. Jump in the comments, let me know what you think.